First flight of the orbital Discovery, and the shuttle has cleared the tower. Discovery's 4 computers now have primary control of critical vehicle functions.
Okay, so now the music is pretty quiet now. I think that sounds a lot better. Make sure there's no typing noises. And we're good to go. Damn, still got typing noises. It's fine, we'll throw the music up a little bit, make up for it. Alright. So it's a little different than my past study sessions, but I want to talk about some stuff. More specifically, I want to talk about the trades that I've been in. I want to talk about the small account, and then I want to talk about what happened with the recent trade that I had, and a few things revolving around that. And then I want to look at futures. I want to see how futures are doing right now. If I can pull up my watch list that I have, hopefully it'll let me get in. Yeah. Look at that. This is what I want to see. Headphones. Let's just kill that a lot more. And then that'll make things better. Cool. Alright, so yeah, futures are up. Very clearly. That right here, just to take up the whole screen. This is what I want to look at. Zoom out a tiny bit. But this is what I want to look at right here for futures. We got 3 green candles consecutively here. Each wick seemed, these 2 right here at least, seem to be bigger than the last. Like this one's bigger than this one. So that seems like a pretty bullish sign to me. But that's just 2, so I can't really stand my ground on that type of judgment there. But there's volume rising here, there's volume rising there. I mean, we could see this gradual increase right here with volume. Can I get like a tool man? Like Tim, tool man? and that's cool. Okay, so we have these 3 increases in volume right here, which are these 2 red candles followed by this green candle. So talking about this, we have this volume bar here, and then we have this green candle up here connected to this volume bar that's even higher than the last one. So looking at the next candle, we can see that it's already off to a decent start on the bar itself, but if we come down and look at volume, we can see that it's already at a point that it was higher than the day before yesterday, but it's also almost at the level of yesterday's. So that's a pretty big sign. I think another pretty big sign is the linear regression channel right here. It's touching the top of that, so that's more or less considered an extreme area. We can see that this is that's the 50. Get rid of that. We can see that that's the 50, and then we can see this is the 5 EMA, this is the 10 EMA. There is something that I wanted to try. I might try it on stream right now, but it's the 9 EMA. Instead of using both of those, I can just kind of cut out some of this clutter, use the 9 EMA, and maybe benefit a little bit more. So might try that out, but for now, we're looking at the 5 and the 10 EMA crossing over the 50. We have the 20 SMA that's riding just below. I mean, there's an increase here, but it's still riding just below the 50. I feel like there's potential for a crossover right here, especially with this candle and the volume here. Even moving down to the RSI area, we can see that the RSI level is at 67, which extreme is 70. So if price were to keep going up from here, we might be hitting an extreme level. But once again, there's only 2 bars here. I mean, 3 if you're really pushing it, but that's not significant to me. I'm really looking for a 4th bar to confirm what's going on. This is also, we can look and see the trend line. We can see where price, I don't want to do that. We can see where price is there. If we just go straight across, see how accurate I can get this. Okay, so this is where price was. Price was at the 4194 area, 4200. And we can see that price is slowly starting to approach this area as well. That could be a potential resistance zone right here, especially if we're zooming out a little bit. We can see that as soon as price touched this area, it fell significantly. So we could be looking at another scenario just like that, just with the futures though. Either way, I'd be curious to see what this looks like tomorrow, and we might be able to move from there. But we're gonna move on over to XLF really quick, kind of get into the heart and soul of this. Zoom out just one, and what we can see here, we have 3 consecutive green candles rising up in a row. Consecutive means in a row, but whatever. Too many words. We can also see that volume is falling on this side, so that's not good to me. That's not something that we like to see. That I like to see is, where's my fucking arrow? Probably just draw circles, can't I? That's shitty. So, I'm gonna draw a rectangle though. Pretty fucking good rectangle if you ask me. We can see right there specifically that volume is decreasing day after day. That's not a good sign, especially if you have 3 green candles day after day after day. A potential good sign is that the 510 EMA has crossed over the 50 SMA along with price action. You can see that, since the 5 EMAs track so closely, you can see that it's pretty close to price right now. The 10, however, is lagging a little bit behind, but the more important one that I think is the 20 SMA, and we can see that that's still got a long ways to go before, well, not long, but it's got a longer ways to go to touch the 50. So that's important. Another important note is with the linear regression channel here is that price is touching the tip there. So that could be an extreme level, and we could see what would happen then. I'm really thinking that this just might be a test. We can also see on the volume profile here, there's a shelf right there at that level. You can see that it just kind of drags. I don't want to zoom in again. See that it kind of drags straight across right there. This line, damn near perfect. And we can see that it's touching. So that could be a pretty good sign of resistance right there, especially since this is an extreme area. So looking at the RSI, it's at 61. Really, I'm just calling that 61 out of 70. No real reason to panic yet. I think the orange zone, if you would call it, would go like green, yellow, orange, red. We're in like the yellow zone right here. Things are starting to become watchable, but we wouldn't be moving into the orange zone until we're hitting like the 65 area. And then, once we're up in the higher 60s, I think that's the red zone. And that's where we're really going to start paying attention. But we're just kind of keeping an eye on it for now. It's not all that important, and just kind of maintain this watch. But the hard part of this conversation is talking about this trade. So what I have been doing with this is I've been selling puts as much as I can to make up for the loss that I currently have. I'm about $260 out of this trade on the long side, but thankfully with the credits that I've received on the short side, I've knocked the total loss down to about 190. So I'm a little bit over half. About, 60%. Is that like 190, 190, 260? Here's a calculator. That's not right. It would be, I think it's just 61 cents, so it'd be 61%. Are hard for me sometimes. So it seems to be about 30%, because let's do it this way. So we have 190 divided by 260. So 190 is 73% of 260. So we can roughly say that 27% of the total loss has been reduced. So once again, it's not ideal. Like, the point of this is to say that I'm still at a loss. I'm trying to recover it, but what I'm doing currently isn't enough. There is time, thankfully, but with how directional that I was, I think with the current market conditions, especially after just the analysis that I did, was, at least in the short term, mildly bullish. The way things are going, especially with the mini or the futures, things are looking up. So on my end, I fucked up. Well, first of all, but the interesting thing about it was that while I was recognizing that I'm trying to make money on this short side, I didn't stick to my management plan for the longs because I essentially shouldn't have had a loss on this. I could have seen these things coming, especially this area here. I mean, the EMA's crossed over the 20. So this area, we can see that the EMA's crossed over the 20 here, or the 5 and the 10 crossed the 20, and things were down. Things were riding down. Things were looking fine for me. The trade was going great. And then we come to this dip right here, which I believe could have been a pivot point. Looking back on it, we can see that price starts moving up. And this is where we're in 715 area. So this would have been Friday. Unfortunately, this is where I started taking the loss because price started going up. And if I would have done the due diligence and maintained more of a watchful eye and stuck to the management plan itself, I would not have taken a loss. I would have gotten out of the trade there and been fine. So, notes for moving forward. The first thing would be to stick to the management plan. Get out when you're supposed to, and leave it at that, really. I think that, part of that problem was that I believed that I had so much time to let this trade play out, and I was just so hypnotized or confident, or either way, it was just wrong. I was so stuck to my hypothesis of the underlying moving down that I just avoided these signs. And if I stay more objective and don't stick with my hypothesis, for better or for worse, I believe I can stay more objective in these types of positions. So the next note would have to be it's maintain a healthy distance from the trade itself. So I think with this note, there was a problem with myself where I was so invested, for the lack of a better term, in this trade specifically, that I was hovering, and I found myself constantly checking the underlying. I would check the position. I would check the long side, the short side. And it was constantly on my mind. It wasn't something that I just feel like I fully had faith in and just let play out. Like the note says, maintaining a healthy distance, checking it regularly according to the plan, but not hovering, being insistent upon it. And that, I think, especially near the end here, these last few days, so like this 7/22, that Friday coming into 725. That week specifically, it was very. I was very insistent on watching the trade, and that's when I was losing. That's when the trade was down, and that's when I was trying to scheme ways where I could sell more short puts to make up for the loss. And that's not a good thing. So that's a big thing to work on for myself, especially in these trades. And another note I want to make is to I would have to say be more open to keeping things short. With this trade, I have 321 days to expiration. While that's okay, if that's what I was going for, the market itself has a drift. It's going to drift one way or the other, whether we like it or not. And the general direction for that drift is up. It's positive. So the longer I have on time with a trade that's designed to work in favor of a down move, I'm going to lose on that trade. And that is something that I need to avoid. So being more open to keeping things short on the long side and on the puts or the short side, because if I can keep things short on the long side, then keeping things even shorter on the short side, it'll help me get in and out of trades, and it'll help me stay more focused and objective in these trades. The next note that I want to talk about is working on the delta ratio. Terrible spelling. Not working, but maybe just work. So after watching Eric's videos on the put diagonal, I started to realize that I haven't put much effort into the ratios for the deltas, and that's something that I need to work on, as well as the expectancy. So work on the expectancy. So this is something that I can always use in the future to forecast something, but also to get hard data from past results, current hard data from past results. And that's something that I need to work on as well, at least for this trade now that it's not wrapped up yet, because I still have the long puts out and I got to close those. But while the trade is effectively wrapped up, I can start keeping track of the expectancy for that and see what that's looking like moving forward. But yeah, that's really what I wanted to talk about on this study session, and probably going to chop some of this up and make it a video, because I really want to get another video out. But thanks for tuning in. I don't think I have many other notes to make, especially right now. I do need to update the trading plan with the management approach, and I need to keep track of. Actually, yeah, let's do this. So we're gonna add a steady moving average, and where's that moving average exponential? There you are. Where'd it go? Where'd it go? There it is. So let's hide these. And hide that one. Apply. And how are you? Okay, I see how you're drawing. I don't like the color because it confuses me. So we're gonna make you pink, purple. That's good enough. Okay. So with the 9 EMA, I mean, it's more closely related to like the 10. So, it's a happy medium, you know. Maybe on a different time frame. Say, so like a 1 month. Is there an hourly? Yeah, I could do 4 hours though. So let's do 6:30. 4 hours. That's a little wonky. But I mean, still, you can see how it works. It sort of follows price pretty well. It's a bit of an adjustment period for me, trying to figure that out. But I kind of like it. It's not too bad. I don't like this time frame though. This time frame fucking sucks. That's more like it. All right. Well, I'm gonna go ahead and get out of here. Like I said, I don't have much else to go over, so I'm gonna leave it at that. And anybody that watches, thanks for watching.